talking about tokenized stocks and tokenized debt. We'll get to all of it. But first, well, I am a senior reporter at Blockworks, Ben Strack, and joined here by two esteemed panelists. If you could please just briefly introduce yourself and kind of what you guys are focused on at your respective companies.
Ben, thank you. It's great to be here with everybody. I'm Wroblewska, CBO for Dinari. We offer global access to US public markets through our D-Shares product. We partner with companies like wallets, traditional financial institutions, neobanks, and other fintechs to enable seamless access to US public markets through, again, our tokenized product. We have users currently in over 60 countries, and we're very excited to talk about whether stocks are the new thing for 2025.
Thanks, Ben, and thanks for having us also. I am Arnab Naskar, co-founder and co-CEO of STOKR. STOKR is one of the oldest players in the asset tokenization space. We started in 2018. We are an end-to-end tokenization solution that is providing the full structure, the compliance support, the KYC, AML, payment gateways, everything. We are an investment platform also. We are currently on our platform, we have over 600 million worth of assets. One of the interesting angles of STOKR is we are issuing the securities on the Bitcoin sidechain. Liquid network, we fundamentally believe that Bitcoin has a huge potential to be one of the settlement layer for the securities because it's kind of one of the close to digital gold in that sense. We are based in Luxembourg. I am personally based in Berlin. We are a VASP, that is a regulated entity in Luxembourg, in the process of getting MiCA license, also have some asset management structures under our umbrella vehicles.
Awesome, great. And before we jump into the growth potential of tokenized stocks and all that, just kind of jumping off of, we've seen stablecoins grow to 230 billion. We've seen tokenized money market funds by BlackRock and others, seeing those tokenized treasuries. Just kind of wanted to get first your sense of the early growth in this market coming from those types of products as a starting point. Yeah.
So I think, and we started talking about this the other day. People like what they know, right? So there's already this global demand for the US dollar that people want access to. If you can make that easier, it's sort of a no-brainer to adopt whatever the thing is that's making that easier. So in this case, stablecoins. Same with treasuries. And I think the natural progression of this is that now we have US financial markets. So public markets, again, there's demand globally for our biggest names like Apple and NVIDIA and whatnot. And I think from there, it's sort of easy to see this natural progression in terms of what people are comfortable with. And once you get comfortable with the one, then you start to think, OK, what else does this apply to? And it makes adoption a lot more rapid, I think. We'll see an acceleration now.
So just like when we started in 2018, it was kind of always a question why somebody will buy a tokenized assets over the traditional assets, right? And we started experimenting with different products because the market has to find some unique use case why they will buy in tokenized format. We tokenize various assets, but where we got our market fit in that sense is Bitcoin derivatives and Bitcoin structured products. And we structure it as a private debt product. So what we did was tokenize Bitcoin mining hash rate with blockstream mining that is currently sitting over 400 million AUM. And now we are seeing kind of borrowing, lending against those products, which is roughly around 300 billion that we are processing at the moment. Because it's a niche market. If you want to have those kind of access, you don't have in traditional infrastructures, you cannot buy those. And that's where we see kind of the market. But like a few years, like I would say 1 year back, we also experimented with tokenized securities. And our thesis was, we need to find some unique edge case why we tokenize. And we started looking into the Bitcoin treasury companies, MicroStrategy, for example. And MicroStrategy at that time was very much correlated against BTC. But you cannot trade MicroStrategy against BTC. So we tokenized MicroStrategy, and we enabled BTC trading pair on a decentralized exchange. And we saw interesting trading volume over the weekend, like 300K, 400K trading volumes over the weekend, because the Bitcoin is 24/7, much more volatile on the weekends than on the weekdays. And we see a very interesting use case because a lot of now treasury companies coming in, so you can create a basket and all these things. And that side is kind of growing quite nicely at the moment.
Great, yeah. And Anna, would be curious if you could just kind of detail a little bit of the clients and customers you're looking to serve at Dinari, and who are interested in U.S. tokenized stocks, and who might not be as interested right now.
So we've had an enormous influx of demand from kind of a much broader scope of potential partners than you might even imagine. So, I mentioned institutions, neobanks, and then, kind of on the more Web3 native side, wallets, different kinds of protocols and applications. I mean, just like there's a huge appetite for US public equities, full stop, making it more accessible just allows more people to have the same thing. So it's actually been really interesting. Even individual investors in regions around the world, they want to diversify. They want to have, exposure to capital markets in the United States, and they want it to be fast and cheap. What makes it fast and cheap? Tokenization does. I think, one thing, and Arnab, you had pointed this out to me at one point, and I think it's a really good point that, Europeans don't trade as much on the retail level as Americans do, right? We're more comfortable with that kind of in general, but you would be surprised at how many people around the world are very comfortable with that. And I think, in younger generations, we might see that changing in Europe as well.
Yeah, and Arnab, Anna brought up that point of what you're seeing from demand in Europe. You are focused a little bit more on the tokenized debt side potentially, but what are you kind of hearing from European high net worth investors who are looking at the debt space, looking at stocks, maybe choosing not to go that route? Anything you can share there?
So we are primarily targeting high net worth investors, family offices, now started also supporting some hedge funds. And as this was kind of one thing which we observed, Europe did not have that much of a culture of equity investment. It's hypothetical, right? I think in that sense, debt is as risky as equity if you think this way. But somehow psychologically, debt is more secure than equity. And we saw more and more demand of different debt structures. So we use securitization vehicles, structure the notes in a tokenized format. Under Luxembourg structure, those notes can be itself issued as a tokenized format. So you don't require a wrapper or something. So that really enables accessibility of the wallet. So you can actually, at the same wallet as you hold the Bitcoin, you can hold the security same wallet. And we see a lot of investors who have understanding of this wallet infrastructure, maybe accumulated some good amount of BTC. Now they can be potentially a private banking client, and they have a bit of sophistication to understand different mezzanine products, structured products in their private debt. And these guys are kind of getting more and more excited and interested quite a lot in accessing those assets without their brokerage firms or without their wealth advisors.
Got it. Yeah, and just kind of another follow-up on just kind of when you're explaining the value add to people who might be skeptical of tokenized stocks and because of the rather frictionless traditional routes through brokerage accounts, what are you kind of really pushing on there to kind of promote tokenized stocks and the value add it can bring?
Yeah, the two most basic things in finance, it's faster and cheaper.
Yeah.
Even if you are an ex-US investor, you can access US public equities. It's just a lot harder and it's a lot more expensive. And, it's these little things that I think user experience is a bigger deal than we often recognize, especially, if you've kind of been sitting in the financial industry for a while or even in Web3. You have to open a separate account somewhere, and then maybe now you have multiple platforms where you're managing, your wealth across, and then it's just a headache. It's harder. But what if you could do that from whatever it is you're using right now, whether it's your brokerage app or it's your bank provider or if it's your whatever your Web3 wallet that you love and know and love. If you could do everything there, that's a really good user experience improvement. And so I think, when there's skepticism, obviously, you start out with the economics. It's faster and it's cheaper. But then there is this kind of qualitative aspect to it that I think actually really makes a very big difference in adoption.
Got it. And are you kind of, how do you feel about that, Arnab?
No, I think like Anna mentioned rightly on this point, like I think to add on the faster and cheaper element, what we consider very much useful in tokenization is the ownership concept. That's, I think, where the entire crypto came in, that you, not your keys, not your coin. So that's a very key concept. And that brings a lot of efficiency. So ownership reduces middleman, makes it more cost efficient, but also it can bring some more efficiency. And I can go into practical kind of a quick use case in this, because it's theoretically like everybody can write about this efficiency and everything, but then there are a lot of practical stuffs we are seeing. So we have this blockstream mining node, and I come to the product again, that has been issued, and now we are seeing some hedge funds lending against it. So in our investor registers that we provide them, there's a pledgee and all these concepts that are ingrained. And this can be automatized in a smart contract level. You don't require an escrow third party to manage the pledgee relationships. And this is a complex borrowing lending. In a traditional way, if you try to do those settlement in this pledge products, you will require a few days. And we have seen the LTVs when it falls or fluctuates on the pledged asset, it can be filled within a matter of few hours without an admin team managing over emails and sending, to and fro. This automatization and this efficiency is making a lot of hedge funds understanding the value of tokenization, because now we are coming to the space where people are looking for nanoseconds efficiency. That's sort of high frequency trading and everybody is coming in. So we cannot wait for 3-4 days admin settlement and reconciliation. And this can only happen, and you can actually go to those level of efficiency when you are the layer one, the securities, in this case, equities or stocks or fund units or securitization notes in a tokenized format. And on the other side, you require the stablecoin, which is a key element. A tokenized securities market cannot survive without a proper stablecoin ecosystem. In Europe, like at least on STOKR, we have seen 90% of our transactions either comes in stablecoin or in Bitcoin. We only process 10% in fiat. And this year we processed quite a decent size. And the reason is because the settlement is instant and people doesn't pay so much transaction fees and all these kind of things. But on the other side, we also see people want this element, hey, I want to redeem, and I want the redemption money directly in my wallet rather than going to the bank account and bank asking all these questions and everything, blocking my accounts and all these kind of things. And this is with the stablecoin, I think in US now we have this different laws coming in, and I'm kind of still getting it with the acronym. It's kind of funny for me, but it's a very quite interesting acronym. And those acts will actually enable more and more tokenized equities or tokenized stocks in a much more accessible way, because you need those delivery versus settlement on chain, and for that, stablecoins are required.
Yeah, and a couple follow-ups there. Well, first, curious of your thoughts on, you mentioned stablecoins and the growth of that will maybe depend, or the growth of that will kind of drive the growth of tokenization more broadly. We've seen some major projections from Standard Chartered and others. I think Standard Chartered had $30 trillion in RWAs by 2034, I believe. Curious of your thoughts on those sorts of projections, and if the growth of stablecoins is kind of a reference point of that.
You want to take it first?
Sure. I think, like most projections, nobody actually has any idea how big the market will be, how fast it will grow. I mean, the range of estimates is, less than 5 up to 30 plus. So does anyone know? Probably not. Obviously, we hope that it grows very large. There are major operational benefits to tokenization, just in terms of efficiency and cost, and something that you were, made kind of passing reference to earlier, Arnab, which was composability. You can create these pairs that don't exist. Right now, everything has to be in fiat, right? So it's, whatever the name is against a fiat currency. Isn't it so cool that you can do something versus BTC? So there are these immense benefits, and so we hope that it will grow very large, because those benefits are quite clear once you start to look at the economics of it. But as for what the number will be, I mean...
Yeah, obviously hard to project, but I guess maybe the bull and bear case of what it will take for it to get to a number like that in 10 years, maybe, Arnab, and what could prevent it from getting close to that?
I think if you see that the market has seen a lot of hostility in the last couple of years. Despite that, you had a stablecoin market of over 250 billion, and it's growing. And that was this where all the regulators globally went against it. Now imagine when the US is kind of getting more and more understanding the value of USD-based stablecoins for the dollarization of the world. That's a kind of a pivotal turning point. So I see from here, the volume of stablecoins will massively explode. Definitely that brings with the risk of retail banks. I see that, kind of, if one is getting value somewhere, the value is coming from, and somebody is losing the value. It's like there is some balance, equilibrium will need to be created. But if you see on the other side, the growth I'm seeing exponential. We are very much early in the space, right? When we started STOKR in 2018, we consider internally the time horizon is 10 years. First 5 years is to really explain the definition and fixing the definition. That's what kind of happened, right? What is tokenized securities? What's tokenization means in securities? When you hold it, what is it? Is it the rights? Is it a claim? What is it? Is it a certificate? The next 5 years, and this last year, we saw the BlackRock coming and launching the Brittle Fund. And one of the interesting things that I kind of noticed is they did not go into a jurisdiction like London or New York or some major jurisdiction to issue their Brittle Fund. They went to BVI. So that makes a very bold statement that, hey, we define the jurisdiction. And we are going kind of global kind of arena in the market, and we'll find a way. And that shows, the market is eager to innovate. And there are a lot of regulatory things are happening, which is in a positive direction. Europe, you have the MiCA, the pilot regime, and all these things coming. In US now, you have those interesting acts. I still keep forgetting, but it's like a very interesting, nice legislation that actually makes stablecoins not securities, which is also very keen ingredient for the tokenized securities to go. So it's a definitely bigger trillion markets, but nobody can pinpoint, say, hey, this is the number. This is kind of the same thing as telling is, let me project the BTC price in the next 12 months. It's the same thing.
Yeah, and do you see a big impact in your conversations when, Larry Fink, CEO of BlackRock, says tokenization is the future generation of markets, and that Brittle Fund launches? Are people kind of getting familiar with tokenization via things like that, starting conversations with you?
It's hard to ignore what Larry Fink talks about, I think, broadly. Yeah, absolutely. I think it helps to just provide some access point, if nothing else. BlackRock is historically very good at describing their products and the benefits of those products. So it helps us. It helps all of us when they take an interest. It also helps, just, I think, regulators to get comfortable on some level. Just, it's not a bunch of technologists talking about it. It's large institutions with customers, and that makes a difference on some level. So yeah, absolutely, I think it does help. When the institutions start talking about it, I think you know that it's not that it's real, but that it's kind of it's working. That it's starting to spread, if you will.
Right. Yeah, and you talked before about kind of the progression between stablecoins and then tokenized money market funds, an easy access point being US public equities. I think there's another camp when people are talking about tokenization growth that the real opportunity is in sort of the highly illiquid asset classes. But just kind of curious of your thought on both sides of that. And I think you mentioned a couple of days ago that you might have changed your mind from a few months ago, thinking that illiquid asset classes were going to be the big opportunity first, and then the others to follow, and sort of switched your mind on that. So curious of what kind of changed your mind there.
Ben is referring to the story when I was wrong. Hence my reluctance ever with projections. I think, so I was in that camp at one time, and I think the reason was that I was thinking about it more from a finance perspective, right? Mm-hmm. So if you've kind of worked in finance for a long time, you know where the operational hurdles are, you know what is illiquid and fragmented, and obviously, tokenization solves that. But I think the right way to think about it is what is adoptable. So there's a reason why stablecoins came first. There's latent, enormous demand for the US dollar around the world. People understand the US dollar. It's not a complicated financial product that, is kind of really only for a handful of people. It's something that we all sort of know and love. And that makes it easy to take that next step of, okay, this is a new technology giving me a thing that I already want. Kind of weird analogy, but I think, the first day-to-day use case for a lot of people of AI agents was like a note-taking app on your Google meeting, It's this stuff that we already need that makes sense to us. And so from that point of view, I think that it is very logical that the progression has gone from stablecoins. Again, the US dollar is in high demand around the world. It makes sense. This is just a different way of getting that thing that I already wanted. And then you go to treasuries, same thing, and then stocks, same thing. So I think it's a matter of not just what could be solved, and certainly, putting very illiquid, highly fragmented private equity and other products on chain is really cool, especially if you are a bit of a finance nerd. But it makes sense for general broad adoption that it wouldn't start there. It would start on something that a lot of people already want.
Yeah, and I'd love to get into private equity in just a bit, but just curious of your thought there, Arnab, and maybe what camp you're in and if it's changed over time.
It's the focus of the user group, right? So we are not targeting, like, from STOKR perspective, I'm happy to have 100,000 customer maximum. I don't want 1 million customers. I know the compliance issues. I will have a building of compliance officers, which I don't want. That's not my progression of the business that I see. But there are definitely a lot of people who wants to do that, so that's perfectly fine. So we are targeting those niche high net worth investors, and they're looking for private banking assets outside of private bank. And this is what we are trying to give them access, even at a much more lower threshold, because if you want to get some interesting assets, maybe you need to put 1 million into a discretionary asset fund of the private bank. You don't want to do that, but still you want to invest 100K in these products, and that's the target group that we try to support. And for these guys, then it comes as a private equity market or private debt market, interesting, structured products. Like we are seeing a lot of question comes in is, hey, I don't want to expose myself fully in the BTC risk, but I would like to have a composite that has some BTC exposure. And there may be kind of BTC, or maybe a product that is a BTC downside protected upside cap with some compositions, right? This kind of products is usually accessible on a bilateral contracts, but a lot of people may not with 100K or 200K or 500K can access that. But if you structure in the right way, with 100 million AUM size, this can be made accessible at 100K ticket size, and that's the audience at the moment we are serving.
Yeah, and Anna, what are some of the main challenges of tokenizing stocks, and maybe give us a little bit of a behind-the-scenes look at just some of the regulatory questions that need answering as well as we go forward and get bigger in this area.
So I think the two key most foundational questions are what's the right way to do it, and then how do you distribute those tokenized assets? And one of the things that I think makes Dinari very special is making that very seamless. So again, it's hard to adopt things that are difficult to adopt, but if you make it easy, then it accelerates that process, which is why we are able to have customers ranging from, again, financial institutions that do not have a single kind of Web3 native person on their team and want to abstract as much of the complexity of blockchain away as possible, all the way down to those who want to direct smart contract integration, and the whole team is Web3 native. So making it easy, I think, was the core element, and then making it functional, making it work. You do have things with public equities that we don't think about day to day, but like stock splits or reverse splits, how do you handle that in a tokenized context? Sorry. So you have these kind of operational things, and you have the technology layer of it, of how to make this usable for our partners, and then going forward to those who want to be tokenizing their fund or what have you. You do have a regulatory aspect to this as well. I think it's around the world, it's all very different, and I do think we're seeing a lot of progress on the regulatory side as there is a greater understanding of what this is, and we do have to go through this process. You referred to the first 5 years of the definitions and how does it work, and does this achieve kind of the core regulatory call it vision of how financial markets should work and keeping consumers safe. And these are all fair discussions to have. We're very happy to see them kind of growing, and we're seeing a lot more of them both in the US and outside of the United States, which is, I think, very positive for this space.
Yeah. Is there a pressing question that you'd like regulators to kind of answer in the near term that would really help Dinari kind of have a next phase of growth with tokenized stocks?
Sure. I think there's a number of operational, mechanistic type of questions particular to the US market that we need to address. But look, the more definitions that we have about, what is this thing and how do we treat it under existing law, or what kind of new rules need to be implemented, those are vital questions. And we may very well be in the first 5 years of regulatory adoption and discussion. But the more it happens, the better it is. I think it's just the rules of the game are very important, both for institutions and for companies like ours.
Yeah, and Arnab, I'm curious of your thoughts on the regulatory piece in Europe. And I know you mentioned stablecoin legislation in the US, potentially, everyone's watching for that later this year. But curious of the regulatory unlocks you see.
So in Europe right now, we are under the VASP regime. So the VASP regime is kind of almost gone. It's the virtual asset service provider regime. From January 1st of this year, the MiCA regime is already active. It's crypto assets regulation in the European level. So if you have license in Germany, that's applicable into entire European, or you have a Luxembourg's license, 28 member states in Europe, you can actually passport that. But that is only for crypto assets like Bitcoin, Ether, stable coins in that direction. But if you're tokenizing securities, that goes still into the MiFID regime, that is the European capital market laws. And they have also a sister regulation that came into, I would say, activity at the moment. It's called pilot regime, which effectively provides a sandbox environment to trade tokenized securities on chain. And that's the significant advantage, because effectively when you, and this is kind of the thesis that when we started STOKR is, after NASDAQ, fundamentally how we settle securities from the electronics world, we did not move. There was no effective transition or evolution. There were Robinhood, Revolut, and all these platforms came in, but these are all front-end innovation, but not fundamentally how settlement happens. When you see about the DLT or the blockchain, effectively what it is, it's a registry. It's the investor register at the end of the day. And that's kind of the evolution that we're moving from dematerialization to tokenization. It's kind of, and then the question comes is, do you require the CSDs, the clearance house, in the same way as it is currently? That is, in US you have DTCC, in Europe you have Euronext, a Clearstream. And this is the fundamental things that the regulators are also questioning, because they also require more transparency, more informations, right? And more accountability in the chain. And that definitely tokenized infrastructure can provide much more efficient way than the traditional counterparts can provide.
Got it. Yeah, and when we were kind of discussing potential topics, Arnab asked Anna about private equity. We mentioned that before. So just kind of curious if you could, I'll re-ask that question here of just how Dinari is thinking about potentially getting into private equity, what that roadmap looks like, and some of the potential challenges and tailwinds as well there.
Yeah, so of course we're looking at private markets as well. We have a very core focus right now. That core focus is in high demand, and we have a lot of work to do to continue to build that out. But absolutely, private markets become really interesting as well. There's obviously demonstrated demand for them, across the world. So it's on the roadmap. It's not the immediate priority, which is, what we're already doing, which is enabling access to U.S. markets, public markets. In terms of complexity, I think one of the things that we've managed to do is to create essentially a methodology or a standard, if you will, for how to tokenize and distribute different types of assets. That's very generalizable on a technical point of view. which is great because it makes, any kind of new asset that you bring in, so whether it be, a REIT, which we are also offering, or, once you start to get more complex outside of that, it makes that much easier, right? So that's key, vital aspect number one. But then, of course, you do have other, other issues of who are the customers for these assets? Are they going to be through the same types of partners? My guess, and again, projections are hard to make, but my guess would be maybe, once you already have some kind of a, KYC process, and again, all of these things are getting more and more automated, or at least simpler over the years, trying to, I'm sure there are people in this room, if you've tried to open a brokerage account, 15, 20 years ago, it was a lot more paper and a lot more writing and confusion than it would be today, right? So these things get easier over time, which also makes things like qualifying customers easier over time. So, obviously with private markets and even with certain, quasi-public types of products, you don't have, you can't have full retail access. There are certain things that can only be offered to certain types of investors. That's just the regulatory framework, right? And it makes sense in certain cases. So you need to be able to make that part easy as well. So there's kind of some technical stuff, but I think the good news is most of it's like pretty much there, which is really exciting.
Right. Yeah, and Arnab, do you have anything to add on that? Just obviously you were interested to know if Dinari was jumping into the private equity space, and just the demand for that.
No, I think the panel brings a discussion, right? Because it says tokenized stocks, and my question was, is it only public market stocks or is it private market? Because at least in Europe, you also see, and the US also, the IPOs have decreased over the time, right? How many blue chips companies are coming, or new companies are coming to the market? We have the same companies that were there a few years back, they're still leading the chart. Now the question comes in, but there are still some interesting companies, interesting assets that are being traded in the secondaries and all the structures. The private equity market is struggling because of lack of IPOs, because they're focusing more on secondary structures. And that actually ballooned the entire private equity market effectively, right? And there are some good high quality assets. It's not that there's not that many high quality assets, but it's the market dynamics. I think we're in a different market cycle. And there the question is, does it purely, what kind of, this infrastructure or the blockchain infrastructure is providing? And we saw a huge use case in the OTC deals, because those are the transactions, because public market became efficient, they got better over the time. It's not like it's a very bad infrastructure. But compared to that, if you see the OTC market, that's a nightmarish infrastructure. There is no efficiency in most of the places. Still, how they manage it, you will question fundamentally that are we still living in 2025? And that's a question. There is a low-hanging fruit where you can change. Even if you charge premium, I think they should pay premium. I think before this, there was a panel that was talking about fees pigs, or the industry is actually charging more fees than traditional market. And it makes sense because industry has to survive, because subsidy does not create an infrastructure. Subsidy creates more dependencies on subsidies. And that's what we see. Some stable coins relies on subsidies, some are not, right? And this is where it comes in. An efficient market really brings more efficient players and more market participants. And this is what actually we're looking for, right? There's a reason always thesis is why we tokenize what we tokenize. Because if we can answer the right question, this market can cross few trillions very easily.
Are you making a projection?
Just a vague number in trillions.
Yeah, and Anna mentioned what you mentioned what you're focused on, and potentially private equity down the line. Arnab, what might STOKR be looking at in the coming months in terms of potential new products? Whether you can be specific or not, but just kind of your main focuses going forward.
No, we are very excited. Our thesis is, if Bitcoin is a 2 trillion asset class, you will have few hundred billions of derivatives and structured products. And we would like to tokenize it. And STOKR is tokenizing on the Bitcoin layer itself. Our assets recently have been also rated by particular, I think somebody from particular team is here in this panel. So there are a lot of people are coming in and understanding. There are a lot of these different service providers are coming to the space. And we are focusing more on what kind of other strategies we can bring to the market, which the market is looking for. So definitely that's in our roadmap. The other thing that excites us is also private alternative investment fund. We are based in Luxembourg. It's a huge market for private funds. And what we saw, people are really excited to have subscription enabled in stablecoin, which in traditional market they cannot do. The fund admins are not so equipped in the traditional space. But that's kind of where it comes in. If you're tokenizing your funds, that makes subscription redemptions very seamless. And even you can use the liquidity pools as an interim redemption rather than waiting for the redemption cycle that is in a weekly or kind of a monthly. So we are definitely excited to explore more products and create more products in that direction that is leveraging more the blockchain infrastructure.
And I know what we've said about projections, but given that our panel is a question, are tokenized stocks the RWA of 2025? And I would be curious of, we're already 4 months into 2025. So how do you kind of view the potential timeline of the growth of this segment within tokenization? And, you've talked about like a tipping point. So curious of your thoughts there.
I think the growth will be pretty explosive over the next couple of years. Like I said, access to U.S. markets is in very high demand. I don't see that changing. It's an incredible market for a reason. So I do see the demand being very high over the next couple of years. I think there are really interesting questions. At what point do kind of tokenized assets become more of the norm as opposed to, something on top that enables the financial system in general to function in a more efficient and cost-effective way? That's a very kind of open, almost philosophical question on some level, but mathematical question maybe as well. But yeah, absolutely. I think the growth that we'll see will be very strong this year. We've already seen it. I mentioned backstage the amount of people that are coming to us asking for a solution and asking about potential integration with our solution is enormous and growing. And so the demand is there, and I think it's going to be absolutely the RWA of the year.
Great, and we just have a couple minutes left, so I'll just kind of end on this. If the tokenization RWA market is trillions of dollars in the next however many years, what kind of percentage do you kind of see tokenized stocks taking up versus tokenized debt? How do you kind of think about where more investors will go in this area?
Do you want to take it first? Okay. I think it also depends on the macroeconomic situation that we are in at the moment, right? If the market demands more debt product, it will be the debt primarily maximizing the market share. If it's the other way, it's the equity market, and there is a very much optimism in the market, then the equity. Because this is also we see is, it's always the market cycle that demands which kind of products can be placed much more faster. And it depends on the cycle, my answer will be.
I think that's a fair point. It's very cycle dependent on some level. But also, again, it's what does the market look like today, right? In a way, I think what you'll see is that tokenization will grow to the point where it's a mirror, maybe in some way, of what is already happening. If it's easier, cheaper, faster, better user experience to work on, with tokenized assets as opposed to, their originating asset or whatever you want to call it, then it makes sense that would simply grow to resemble exactly what the market looks like today.
Great. I think we'll end there, but really appreciate it, Anna and Arnab. Give it up for our panelists.
Thanks a lot.